Well, welcome everybody. Thank you very much for tuning in. I'm Tyler Carter with NuView Trust. Just a couple of quick housekeeping points before we begin. As everyone joins, I just want to explain that we came up with this topic because it's something that I'm asked about regularly. And when we solicited feedback from many of the groups that we work with, the general consensus was that you wanted to know what impact COVID is having on business, as well as what we're seeing from both our clients and other advisors. Feel free to enter any questions you may have into the Q&A box. I'll do my very best to address them as they're relevant or at the end of the webinar if time permits. We want to make sure that all the content that we create is relevant and exciting for you. So if there's a topic that you'd like to see covered, please don't hesitate to contact me directly. You can email me at tcarter@nuviewira.com. And I assure you that although my friends and family might disagree, I'm very receptive to feedback, both positive and negative. We want to be as dialed in as possible so that we continue to provide valuable content to our audience. All right, let's see. Okay. We will go ahead and begin. So good morning again, and thank you for risking 20 to 30 minutes of your day to listen to NuView's perspective of the alternative investment space during and post-COVID. I'll talk about what we're seeing as well as what others are doing to stand out to weather this storm. I think that most of you are familiar with who we are and what we do, but for those of you who aren't, I will take a minute to explain who NuView is and what it is that we do. We're a custodian for alternative investments. We don't provide any investment advice or guidance. We're never endorsing any specific products. Our clients come to us because they're interested in making an alternative investment for themselves or for their clients. Our business is essentially divided into two divisions. We work with mom and pop investors who are interested in making one-off unique alternative investments, typically a piece of real estate, a private note, or something like that on our retail side of business. And then again, on our institutional division, where I'm primarily responsible for our sales endeavors, we do work with fund sponsors, the independent broker dealer and RA communities, as well as their corresponding reps, advisors, and other people that are in the same space. So given our vantage point, I think we're fairly uniquely positioned to offer some commentary about the market as of late specifically, at least as it pertains to alternative investments. We're going to touch on some of the unique strategies that we're seeing, both from an investment perspective, as well as from an asset retention angle. And I'm sure we'll pepper in some general observations as well. So the first component, what are we seeing? What's everybody hearing? I think it's important to put this conversation in context. What we're seeing at NuView is different than what most people are hearing. Keep in mind that alternatives still aren't well known to a huge component of the population. In any discussion in the news media, generally lumps them all together. They don't differentiate between the different types of alternative investments. You'd be led to believe, that illiquid alternatives are inherently bad, tools of the rich, and to be avoided or at least unavailable to most, and that publicly traded investments are inherently good. I'm sure that obviously all of us in attendance know that that isn't the case. I think it's also to point out the obvious that alternatives, again, is a very broad term. NuView deals with just about every type of alternative under the sun, with the exception of collectibles and insurance. We touch everything from real estate deals, private equity deals, hedge funds, crypto, and anything else that isn't publicly traded. So I think that the coronavirus pandemic has mostly influenced the following 10 or so trends or observations. And the first key point is, thankfully, alternatives remain in demand. While some independent broker-dealer firms had temporarily suspended distribution of certain alternatives, many other people and groups are still flocking to alternatives. There's still a high percentage of people who don't hold any alternatives in their portfolio. As I mentioned, a lot of people don't know that it's even an option. Despite what you may be hearing, there are a lot of funds that are really resonating with investors recently. I think that those in the alternative investment space are uniquely positioned. As the markets are always referenced as if they're a single entity, we hear about the NASDAQ, the Dow Jones, the S&P 500 on a regular basis. Generally, people are trying to obtain broad exposure to the market as a whole. I think this is where alternatives have a great tactical edge as far as we're concerned. Clients, and especially our older clients, are particularly interested in diversifying away from the risk of the public markets we're certainly seeing no shortage of interest from clients in non-correlated assets. So the first strategy, that successful advisors are still implementing is that they're still prescribing alternatives to differentiate themselves from the many groups that simply provide an asset allocation model of publicly traded securities. Obviously, if you're going to be different, you've got to offer something different. The second point is a bit more specific. With the aging demographic and the number of people who are approaching or moving into retirement, there is a big demand for income producing alternatives. I think there are several factors contributing to this. One is certainly the demographic element. I mentioned that. And the second, I think, is extremely low interest rates. Many retirees are having to look in non-traditional places for investments that generate income. Bonds, money markets, and CDs aren't appealing to most these days, as obviously they're yielding a paltry sum. As we look down the road, I'm not sure that we're going to see substantially higher interest rates for some time. I think the prognosis looks good for income producing alternatives. And that was sort of backed up by yesterday. Jerome Powell, the Federal Reserve Chairman, made the comment that we're not even thinking about raising rates. The third component that I think is really important and definitely resonates with investors is that we're seeing a big demand for repeatable strategies. And that sounds sort of obvious, but I'll be a little bit more specific. I always like the quote, and I use it a lot, about that was of Warren Buffett's, saying that he doesn't ever invest into something he doesn't understand. While many people do invest into things they don't understand, I think that alternatives have a much more compelling story than a mutual fund or an ETF typically does. It's not sexy to highlight the ABC Large Cap Growth Fund versus the XYZ Large Cap Growth Fund. So having a story that resonates with investors is very important. A lot of our investments are tied to real estate, so I'll use that kind of as an example. If there's a real estate fund that buys up single family homes in specific markets and have parameters, something like that, they're all at least a 3-2 with a minimum of 1,500 square feet, with the garage in good school districts that rents for at least X, that's something that's easily understood by the investor and can be done on a large scale. I think the next trend that we're seeing that's really been influenced by the pandemic is that while there's always going to be a market for the type of robo-advisor, phone-based or branch office type of investment advice and guidance, we're hearing a lot, particularly from those who are going into alternative investments, that they prefer something that's substantially more high touch. And the COVID pandemic actually provides an interesting advantage for many of us, one of the rare opportunities where that's the case. In the past, clients wanted to meet primarily face-to-face, particularly if they were sophisticated investors and especially if they're wealthy. I think that the pandemic's going to have a lasting impact on the way that we do business. And in my role, attending industry conferences was a major component of my job. In the absence of being able to meet in person, we've resorted to Zoom meetings and conference calls, where it might have previously been taken, as an insult or a slight to propose meeting virtually, instead of in person. It's now seen as prudent. So there's also a lot of gains in efficiency that we're seeing from being able to connect to more people now that obviously time and travel expense isn't a factor. So a lot of successful and proactive advisors are reaching out to their clients to learn their clients' preferences and technological capabilities. When the market's experiencing volatility, it's obviously important that you're in close contact, regardless of whether it's virtual or in person. The next component, I think, has also been heavily influenced by the pandemic. And I mentioned that there's an increase in demand for high touch service. Everything's trending in that direction. It's not just financial services. However, what I'm hearing is that many advisors are choosing, or rather many clients are choosing to do business with their advisor, not only because their advisor picks investments, but almost to a greater degree because their advisor provides education. I think that clients are more interested than ever in having an understanding of the strategies that have been implemented in their portfolio. The pandemic has obviously had an impact on it. I don't know about you, but I'm certainly spending more time at home, and I find myself opening and actually reading through all of the mail that I get. So with so many fewer options for leisure, I think that many others have had an interest and focus on their financial state of affairs. They have an insatiable appetite more now than ever for educational content, and that's going to contribute to more loyal and long-term clients. A specific strategy that I'm often asked about and kind of frequently share is the component of strategic Roth conversions. There's been a big uptick not only in the number of people who are implementing them, but in the number of people who are aware of what they are. Essentially, an example of that would be if there's a new construction multifamily fund, the client initially invests something like $100,000 that might end up at a reduced value of $50,000 or $60,000 a year into the project when debt becomes involved, the property isn't providing cash flow, there's not a secondary market for the security. It creates a compelling opportunity for a strategic Roth conversion at a discounted value. There are a myriad of products that are likely in your quiver of investments that can provide that benefit. So that's something unique. In light of the volatility, it's something that people are doing to mitigate taxes. And with that is my next point, that it's obviously impossible to influence the stock market, but there's something in most cases that people can do about their tax burden. And we're seeing that successful advisors are looking beyond return alone to ensure that the impact of taxes is considered. I see countless examples when an advisor has clients who are self-employed without any common law employees, but they're not taking advantage of having something like a solo 401k where they're able to sock away around $60,000 or so, with tax advantages rather, and that's substantially more than what they can do inside of a traditional Roth IRA. So the pandemic provides an opportunity for advisors to do, I think, some retooling and to look at their client base, to determine whether each of the clients is making the right contribution to the right type of account. We're also seeing substantially more people who are using specific types of alternative investments for a tax strategy. Things like energy deals, conservation easements, an opportunity zone fund, and believe it or not, even things as exotic as something like an exotic wildlife breeding program. Understanding a client's life events, whether it's selling a business, getting divorced, having children, buying or selling real estate, those kind of components, it's imperative that you understand those elements for cultivating success. And I think particularly in this time when the market has been volatile, it's a great reason to reach out and get in touch with your clients. The next point has to do with kind of an interesting change of tide that I'm seeing. We obviously haven't seen the flood of investors that many people predicted into the crowdfunding space. We sort of expected more than we're seeing. However, what we are seeing more of are new sponsors who've historically dealt with institutional investors alone, and they're moving into accepting money from accredited retail investors, either directly or through the RIA BD channel. So I worked with one sponsor in particular. They used to be able to claim that they hadn't ever lost money for any client, and now they basically have to say that they've never lost money for a retail investor after, I believe it was an insurance company, one of their major backers decided they were overweighted in that sponsor's particular sector and kind of influenced a premature exit from that project. So I think that the key takeaway is that despite the coronavirus kind of messing up plans for many sponsors, there are still a lot of sponsors and sectors that haven't been as adversely affected entering the market, and they are looking for capital from retail investors. I think we're at the ninth point is that, the feedback that we receive is leading us to believe that the large firms, many of the household names, Fidelity, Schwab, TD Ameritrade, they're moving either away from holding alternatives or making it cost prohibitive to do so. A week doesn't pass at NuView without me hearing from an upset advisor or a client who tells me that there's a particular firm that won't hold a particular asset anymore. Now the advisor has to have an uncomfortable conversation with their client, and in many cases the asset was booted from the platform for reasons other than performance. So it's an awkward conversation in normal times, and the awkwardness is certainly exacerbated by the coronavirus. I think, however, overall, kind of the most important point of what we're seeing and what savvy advisors and investment sponsors as well are embracing is the fact that relationships are important now more than ever. I'm not super big on cheesy phrases, but I can't help but think of the expression that, your network is your net worth. That certainly rings true, and I see evidence of it on a daily basis. I speak with a lot of advisors who have found success making inroads with sort of niche clients, whether it's, physicians or firemen. Many successful advisors that I speak with, and even many groups raising capital, have their distribution team that they've found commonality among their clients. I think having a specific target audience for prospecting, has been, as it's been explained to me, a much more effective strategy than just generally searching for, accredited investors that have a liquid net worth of, X, Y, or Z. I think the second point about relationships, and this is kind of unique, is that I've heard from several people recently that they're leveraging their personal hobbies or passion to drive new business. In a time where our options for socialization are at a minimum, people recognize and are receptive to doing business with someone who shares their same passions, hobbies, or interests. If you're a private pilot, an avid fisherman, if you're into photography, if you're a painter, whatever it is, you can use those relationships, when prospecting for new business. The next part about relationships, and this was feedback that I actually received earlier today, is that it's incredibly important that as your clients grow more sophisticated and more wealthy, that you have a team, of people, professionals rather, with their ability to serve your clients. The person I spoke with earlier today told me that their relationship with a banker has been invaluable to their clients. The banker has spent a ton of time with advisors, basically, and the advisor's clients, going over, in this particular instance, it was the Payment Protection Act. So the banker was going over all that, guided them through the process. And obviously, if you've got someone with a complicated tax scenario, you have someone on that side you can refer them to. If they're selling commercial real estate, who is your broker resource? So during a time when many people are in a holding pattern, having these types of relationships where there's an opportunity for a reciprocity, for referrals, can make all the difference in weathering our current set of circumstances. And the final part about relationships, and this is for better or for worse, out of desire or simply from a perspective of confinement, the coronavirus has forced all of us to spend more time talking with our families. And I think that a lot of people are seizing the opportunity to engage with their clients' extended family and certainly their heirs. And this is kind of redoubled when they're prescribing alternative product. It's important that anyone who might become the owner of that account and who ultimately decides whether or not you remain in their employment understands the strategy and the value that you're bringing to the table. Let me take a look. And I suppose at this point in time, if anyone has any questions, feel free to enter them in the Q&A box or the chat box. I can see both here. I'll give it just a minute. And while you're thinking about that, I want to emphasize that I want to be respectful of everybody's time. There was a quote from Ben Franklin that I found especially relevant. And it was basically that there's three sorts of people in the world: those who are immovable, people who don't get it or don't want to do anything about it. There are people who are movable, people who see the need for change and are prepared to listen to it. And then there are people who move, people who make things happen. This resonated with me because I recognize the first group, we can't do anything about. We're in the business of helping the second group, and you in attendance are the third group. We're extremely appreciative of all that you do for us at NuView. And if you have any other questions or if I can be of assistance in any capacity, please don't hesitate to reach out to me directly. I can be reached on the phone at 407-519-9176, or please don't hesitate to shoot me an email at tcarter@newviewira.com. All right. Well, with that in mind, I hope that everyone has a wonderful day, and I look forward to getting to know each of you more in depth. Thank you.